So many are buying the dip right now. Whenever DXY goes down, guess what happens? Strength goes into Bitcoin, and we see crazy rises for Bitcoin. That's what we want to see, right? Why? Why do we want to see it? Especially for those of us in Bitcoin, whenever DXY goes down, the dollar loses strength. Guess what happens? Strength goes into Bitcoin, and we see crazy rises for Bitcoin. It also correlates a lot with the 4-year cycle. But if you look at Bitcoin's growth, pretty much all happened during times when DXY started coming down. And Bitcoin's declines all came when DXY started going up. So right now, DXY is coming down. Still not that far down, but it is coming down. 10-year yield is showing it's going down. So all this adding to the fact that things will get better. Things will get better. Just maybe not today, but things will get better. And that is why so many are buying the dip right now. Cathie Wood, she's definitely a bull. She's buying Coinbase. Coinbase stock has been decimated recently, right? So she's buying Coinbase. She's buying Grayscale Bitcoin Trust. And she's buying Tesla too. It was announced that she's buying Tesla because all of these have been decimated, right? But that's what you're supposed to do. What do you, that's what you're supposed to do. When things are low, right, you take advantage, especially assets that you believe in, it's going to come back and get stronger. That's what you do. So glad to see Cathie Wood, even though I poked fun of her a little bit before for selling a couple things at top. It's okay. Or selling at bottom, I say. Selling at top would be a good thing. But selling a few things at bottom, that's okay. Overall, she's a big Bitcoin bull. She's a Tesla bull. She's a technology bull. She's a crypto bull. And still believes that Bitcoin can hit $1 million by 2030, which is only, if you think about it, 7 years away. So, good overall. Also, other crypto whales are stocking up, right? If you look at this, whale and shark addresses accumulating. This is specifically in stable coins. Stable coins going higher, right? Just wait until that money flows out of stable coins and into Bitcoin and other crypto, right? So there are definitely a lot of loading up, stocking up at this point. And, Bitcoin also being stocked up. A lot more people have been telling me about hitting that magical 1, becoming a Wholecoiner, right? And you could see on the top right-hand side how fast it's going up. Many people are taking advantage, not just the whales, not just big institutions, but there are a lot of retail investors also taking advantage, stocking up while they can. All right, so that's good. That's good. I guess a little Binance news, right? A lot of fear over Binance recently. A ton of fear about how they may be the next FTX. They could crash, and then you guys know I was very angry last night talking about Kevin O'Leary testifying in front of the Senate, saying, "Oh, it's all CZ's fault. It's all Binance's fault that FTX went under," still painting this picture that SBF is innocent. And they're the little kid being bullied by the bigger kids like Binance, right? He was just lying through his teeth, trying to still protect whatever reputation he has left. And it was awful. It was awful. But without this he said, she said kind of thing, right? In terms of the FUD against Binance and whether or not there's going to be a bank run, Crypto Quant using some on-chain data to show that, Binance isn't exhibiting FTX-like behavior. There isn't a massive bank run where Binance is basically out of Bitcoin or Ethereum like the days before FTX closed down their withdrawals because they ran out of Bitcoin. They had zero, basically, and zero ETH. That's certainly not the case for Binance. So here's a list on Nansen that shows the total reserves of all the exchanges. Okay, And you can see clearly these are top 12. Coinbase is not included because Coinbase has not given up their address or addresses to show their proof of reserves, although they say they disclose it quarterly, right? And they say they have about $5 billion in assets. So if they were showing, they would be like number 3. Okay, X is number 2, Crypto.com, right? Huobi, KuCoin, Bybit, all the big guys, right? And you add them all together, there's still not even half of Binance. That's just how big, shows you how big Binance is at 57 billion. And even then, I think that's low, because if you go to Binance's individual page measuring how much assets they have, it's closer to 60 billion. So Binance is not having a massive bank run. It's not exhibiting FTX-like behaviors. So just want to squash that a little bit more because there just seems to be endless FUD about that. You know what? That is what I wanted to cover today. There's not a whole lot. Today is one of those down days, red days, right? And it's not fun. It's not fun. And I think today is just because Wall Street doesn't know what to think about what Powell said yesterday. And also you have 2 other central banks talking about, or not talking about, did raise their rates and will continue to raise rates, right? So there's still this uneasiness about whether or not they're going too far, whether or not there's going to be more pain ahead, right? And overall, this is natural. It happens, right? The best way to look at it is you have more time to be loading up and DCAing while things are low. So Bitcoin right now is at 17.5, a little bit, unfortunately, a little bit lower than last night. It was about 17.8-ish. Looked like we were holding, but dumped a little bit this morning because of the global markets. And if you look at the entire market cap, yesterday we were at 880, or is it still 880? Well, that would be amazing if the global market cap is still higher today versus yesterday. Maybe it is, but most things are showing red, but maybe that's just an update. All right. I think that's pretty much it. The only other thing is I do want to mention a new sponsor, a new service that a lot of you guys, I think, will want to take advantage of because of this horrible, horrible, horrible year. A lot of you guys are in the red, right? So that is why, you know what? I want to bring up CoinTracker, which is a service that does your taxes for you. Crypto and NFT taxes done fast. Why this is important? Because we have 2 weeks left. We have 2 weeks left in this year. So if you wanted to take advantage of tax loss harvesting, this is your chance. You have 2 weeks left because after the year rolls into 2023, you can't take advantage of this. So many of you guys that are in the red, you want to take advantage, right, of tax loss harvesting because it can help you on taxes, right? So it could offset your capital gains on anything else that you may have, right? And with crypto, just to remind you guys, that you can do wash sales. It has not been prohibited yet by the IRS, which means if you want a tax loss harvest or tax harvest loss, you can actually sell off your crypto and buy back immediately. And as long as you don't resell it again, well, then there you go. Of course, I am not an accountant. I am not an accountant, and this may be different for different countries, but it is something definitely worth thinking about. So that's why I partner up with CoinTracker. Basically, they will aggregate all of your trades for you, hundreds or thousands or millions of trades that you may have done on various exchanges, various wallets. They could track it all, and they will calculate it for you so that you don't have to guess. You don't have to manually calculate, right? They're also partnered up directly with Coinbase, OpenSea, also part of the TurboTax H&R Block. This project was started back in 2017 by 2 ex-Googlers, and it's a very simple interface. It could connect up to all your exchanges. You can plug in your wallet addresses. It will automatically calculate everything for you. So if you wanted to take advantage of tax harvesting by the end of this year, you still have some time. All right. So check them out if you're interested. Link is in the description. Hiked up yesterday and today. Yesterday I already covered in the U.S. Fed Powell raised the rates by 50 basis points, right? So quite significantly. This morning, 2 other major central banks did the same thing. The ECB raised rates by 50 basis points. It seems like everyone is paying attention to what Powell's doing. Now, the ECB is kind of slow. ECB's inflation is really high. So they raised it from 1.5 to 2%, which is still barely nothing. In the U.S., we're at 4.25 already. So they're more than half or less than half away, right? And then not only that, Bank of England also raised rates 50 basis points to 3.5%, still trailing the U.S. But yesterday, today is like a day of rising rates, right? So whenever you raise rates, obviously it has an economic impact because it becomes more expensive to borrow, and everything else trickles down in terms of credit cards, car loans, mortgages, all go up. Corporations can't borrow as much, especially when they need the capital, because now they have to pay so much interest, right? So corporations are also affected. They're not able to grow or hire nearly as much. So this is what's happening right now, okay? But the thing is, I got to say, what Powell said yesterday wasn't that bad. In fact, I thought it was pretty good. But you know what? Wall Street may be taking it a different way, or this may be just I don't know, just fear because of not knowing what's coming, right? Fear of what's coming in 2023. Could be. But yesterday, Powell was actually pretty dovish. He was actually hinting that, rates will slow down soon, right? And completely stop in 2023. So I'm still looking forward to that. But today, it seems like all these other rate hikes has the markets spooked quite a bit. If you look at a DXY, though, you know what? DXY is still going down. This is what we want to see. So some of the things that show that better days are coming, for example, 10-year Treasury yield is dropping. Whenever a 10-year drops, that means people are thinking, okay, better days are coming. Whenever it goes up, people are thinking worse days are coming. Okay, so Treasury year has been dropping down from the 4% now into 3.5%. That's good. That means a lot of people think that better days are coming, 2023, right? So it's time to dump these Treasury bonds, which basically yield nothing, and get ready to be buying risk-on assets like, tech stocks and Bitcoin and crypto, right? And today, look at DXY went down. Whenever a DXY goes down, that's terrific.